Good afternoon, everybody. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we are here to present our weekly wrap-up. Graham, I understand that we might be able to get off this merry-go-round a little bit. I think we had some good news last week.
Well, I don't know if we're off the merry-go-round, but it's nice to have a rest, if you might. And I think that's what we got last week. You know, we really saw the indices and the U.S. indices really pop up, really buoyed up with lower commodity prices, maybe interest rates coming down. Even though we still have some recession fears, we really saw the markets really pop up. And that shouldn't have been unexpected. We made that call the previous week during the wrap up that saying maybe this market is just way oversold. Sentiment's too low. It's setting itself up for a bounce. See, we saw the NASDAQ, tech-laden NASDAQ, pop up about 7.5%. The SP and the Russell popped up about 6%. We did see about 10 of the 11 S&P sectors move higher. And energy was the lone loser. Crude oil fell about 1.25%. I don't know if I feel too bad about that because really crude has been really the leader all year long. But we are seeing some commodity prices like copper plunge about 9%, ag prices, so on and so forth, really pull back. You know, some interesting numbers that we saw. We saw the manufacturing PMI numbers, when we're thinking about inflation, fall to about 52.4. So we're not seeing it's not heating up, at least in these numbers. It's actually contracting, which is good if we're concerned about higher inflation and how quick and how fast the Fed needs to move forward. We also saw housing prices pull back about 3.4%. So the higher rates are maybe causing a little anxiety with the buyers out there when they're thinking about buying a new home, since they popped up to over 6% last week. And heck, Stacy, at the beginning of the year, I think it was the beginning of the year or the end of last year, I think you get a 30-year mortgage at 2.6 or 2.7%. And
Right.
now it's like 6 or 6.28% at one point. So yeah, I think you're really starting to see a slow there. We might be seeing right now a real top in inflation, and because we're seeing like wages, used car prices, commodity prices, so on and so forth, starting to roll over. We'll just have to wait as we get in July to see those economic numbers.
Okay, well, what are the chances that this bounce that we've seen will continue? And how long do you think it could last?
You know, I think it's a solid chance it could continue as we move into earnings season, which we are approaching right now. I think this week we start with some earnings. So we want to see how earnings look for companies. Are they going to slash and burn? Are earnings going to come down, which, you know, and has the analyst community brought earnings down enough in their expectations? So I think that's going to be something to keep an eye on that will dictate how quick, how fast, or is this rally, short-term rally, have legs? I think as we move in July, when we get some more economic numbers like the CPI, so on and so forth, you know, I think it's going to be interesting. Do we have a top and we're rolling over? Are we starting to come down? And I think if we see, you know, company earnings stay the course, maybe come down a little bit, but not as much. If we see maybe inflation top and maybe start rolling over, maybe it's not going to come down a lot quick. I don't expect that. I think this market has legs to continue to go higher. But I do want to caution our viewers, we're not out of the woods. This is going to take time to get out of. So during these periods, you might have bear market rallies and then it might sell off. Bear market rallies and sell off. We'll just have to see if this one's got legs to continue.
All right. Well, what kind of opportunities does this bounce provide or change for investors?
Yeah, I think when we think about opportunities, like we've always said to our clients and our viewers, listen, have a long-term view of the markets. Focus on quality and a diversified portfolio. And if you put those, if you check those boxes, you know what? We're going to weather right through this. This is not the time to panic. This is not the time to go to all cash and try to time getting back in. I mean, we all know that just doesn't work. But it doesn't mean we don't need to take some steps to be more mindful of the environment we're in, maybe the risk that's associated with investing, and also making sure you keep a little higher cash reserves. You make sure you don't have that in the stock and bond market if it's for any projects, so on and so forth. So again, we're cautiously optimistic. We know this is going to be a process over time. It's not going to alleviate itself over the next month or two. So I'd say there's great opportunity in high quality companies in a diversified portfolio with a view of 6 months, 1 year, 2, 3, 4, 5 years down the road. We'll be looking at a market, at least in our point of view, that's going to be a lot higher than it is today.
Okay, well, thank you so much for that information. And thank you to our viewers for watching today. I do want to present that our August Retirement Planning Today class is being scheduled. This is a multi-day educational course for folks who are at or nearing retirement age to really dig deep and learn the A to Z of the retirement planning process. And it's hard to believe that it's time to start presenting those classes for fall. But if you or someone you know would benefit from this, please go to our website and go ahead and look into signing up for that. I know that these classes are going to fill up super fast with folks who are concerned about all of this, right? Especially right now, right, Graham?
Absolutely. I know there's so many of us, including ourselves, who are concerned about what's going on, and I know it'll provide some peace of mind.
Absolutely. So please take a moment to sign up for that, and also just have a great holiday weekend. And we'll be looking forward to catching up with you next week for the next weekly wrap up. Thanks so much.
Take care.